Hello and welcome. This is Robert Schein, Managing Director and Partner of Blanke Schein Wealth Management. Today is September 18th, 2020, and this is our Friday Insights edition. We have a lot to discuss, so let's get right to it, and thank you for watching. So right out of the gate, we got some positive economic news. It's a leading economic indicator. It's the University of Michigan's Consumer Sentiment survey, and now they take a mid-month look. So this is a mid-month estimate for the month of September, and the report right now is 78.9. Now they were expecting 75.4 as the estimate for the mid-month, and keep in mind at the end of the month it always closes and then it gets revised either up or down. Now what's important about this is the month of August got revised up even stronger in the north of the 80s. That's a huge indicator. The sentiment and the consumer sentiment, right? How are you feeling? Do you have money in the bank? Is everything feeling better from where we were? This is the best level that we've seen since March of 2020. So before the shutdown and the pandemic really hit and impacted the greater United States. So this is a positive trend and it's going to continue. Let's just keep seeing the upward revisions, hopefully. And that's just it's a sentiment indicator of how we're all feeling. So we're feeling a lot better. And as I tell my kids, you know, we're getting closer one day, every day, closer to the end of this and versus the beginning of it. If you put that perspective of before you, it's a one day at a time type thing. But at the end of the day, we're not as bad as we were back in March. And the evidence is being reported and that's a good positive trend. So I wanted to report that today. And bulls and bears right now, let's watch the close. A lot of the S&P, the NASDAQ is doing a big secular rotation. Money's moving out of big tech. It could be momentarily and rotating within the market. S&P 500 is testing the 50-day moving averages. So this is a Friday. Like I said before, you always want to watch the close on a Friday. Hopefully we don't close below the moving averages. That would be a negative indicator going forward in terms of short-term trading environment for what to expect on a go-forward basis. Again, if we trade lower, and start selling off as Friday close hits today, that's just going to indicate we're going to have more selling next week and into the weeks to come. But uncertainty is for the markets is not unheard of right now. Again, we've got Congress sort of at a stalemate. They're trying to discuss whether they're going to extend the unemployment and the special business assistance that's needed, especially for the airlines industry and a few other service indicators right there that they need assistance. So the market's actually going to send a message, and if they break the moving averages, it's going to send a real clear message to our policymakers that they need to do something. So just watch for that, watch how we close, and let's keep an eye on the moving averages as relates to the bulls and the bears are fighting. Now, let's go to the bull-bear ledger. It's still extremely favorable. In fact, I put the scoreboard up before us right here. And as of right now this is open to revision, but we've got an internal indicator here that shows all of the bullish indications and the bearish indications, sort of what we look at in terms of indicators in positioning on a go-forward basis as it relates to our clients' investments and wealth management and so on and so forth. Right now, the bullish indicator, I've got 19 items here that are, S&P trend is positive, 6-month best rally in history. The breadth of off of lows and new time highs have expanded. Credit conditions remain stable. The risk model is 8 out of 10. Discretionary is over staples. There's all of these things. Transports are picking up. Industrials are picking up. Materials are picking up. We're seeing global growth. Those are all the indicators that are in the column on the scoreboard as we're getting into the college football season and more are coming online, reversing course. And that's very positive. We're reopening across the United States. And it's a healthy thing because just for our psyche, right? Consumer sentiment I talked about earlier, our psyche is so important on a go-forward basis, just for the health of us, right? Individually. So this is all positive right now. And there's about 10 bearish indicators, and some of those are the price to earnings, right? But the cool thing about that is, or the neat thing about that is that the earnings are unknown. We don't know where the earnings are going to be. So you can't value where the stock market should be right now. Are we fair valued? Are we overvalued? Are we undervalued? What I will tell you is we're going to watch the GDP. We're going to watch the empirical evidence. Are people moving around? We had somebody the other day report, I just saw a friend of mine on Facebook that said they went traveling and they went on 4 airplanes in the last 4 or 5 days, right? And all of them were full. All the middle aisles or all the middle chairs are all full, right? So He basically is traveling. He's in our industry. He's traveling, and he basically just posted something saying there's no indication right now of sort of fear within the travelers that are traveling. All that means, it translates into people are getting out and there's commerce that's happening. That's going to work its way into the GDP, which we're in right now, the third quarter, if you will. And the consumer sentiment is another indicator. So, you can't really price the price to earnings ratio because companies are still trying to find their way through it in terms of the earnings right now. So that's something in the bearish case, but I think it could turn to the bullish case later on. And then bond yields remain low and oil is sub 40% or $40 a barrel. $40 a barrel for oil, that's something where the energy markets, for the energy markets, and that's keep in mind, that's one of the 11 sectors of the S&P 500. So it's keeping the S&P from going higher highs. So oil sector needs oil, or the energy sector needs oil to be plus $40 a barrel to be positive in their earnings and be able to make money, make earnings, if you will. They're below that right now because oil is hanging below that. Oil will only get above that if we see global demand kick in and supply has continued to be shut off. So that's one of the bearish indicators. I'm just giving you an indication of what's inside this number here, but that's all something that could be, as we talk about on a go-forward basis, those are open to revision as the economy continues to reopen. So that's it today. Thanks for the Friday Insights. Thanks you, as always, for tuning in. Like and subscribe. Thanks for watching, and take care. Have a good weekend.